Hello everyone. This video is for all the members who came out to my live meetup class and took the mini course, and I'm going to discuss and show you a very powerful money manager indicator that you should have already received with the indicators list. And can you guess which one it is? What am I calling the money manager indicator? Anyone know? Okay, well, let's go on and I'll tell you in just a second here. Remember, the overall goal is to learn how to trade stress-free using the right tools, and I have given you my definition of stress-free trading many times, and I'm going to continue doing that over the next few videos that I'll be producing. So, my definition again: work less with minimal computer screen time, making simple decisions quickly without hesitation, feelings and emotions, growing your account balance in a safe and structured plan. Okay, now one of the most important and powerful tools you can use to achieve stress-free trading is, yes, the position size indicator, which you should have already received. Now I've renamed this, and I know this as your personal money manager. Okay, so again, guys, this is me. You already know who I am, Martin, and welcome to this video. I'm going to show you how to enter a trade using the position size indicator. That's the actual name right here. It's called the pause, or pause for position underscore size. That's what will show up on your charts on the left side in the navigator window. Okay, so that is the indicator, and it is your best friend. And before every trade, you're going to use this indicator without fail. It's like having a trading assistant looking over your shoulder, your own personal money management assistant. And this indicator will help you to choose your correct lot size based on your overall risk for your account balance. Okay, so whatever your account balance is, whether it's $200 or $10,000, it's going to automatically choose for you the correct lot size, and never change that, guys, because that's how you're going to get in trouble by over trading or choosing an incorrect lot size, most likely too big, where you should be placing a trade with a much smaller lot size. Next, this indicator will tell you where to place your entry stop loss. Okay, so the very first thing, whenever you enter a trade, you have to place a stop loss, and that's going to tell you, this indicator is going to tell you exactly at what price level to place your stop loss. Next, this indicator is going to tell you where to place your first profit target level, and this is important because the sooner you can reach your profit target level, you're making money, and from that point on you are going to be trading risk-free, okay, because you're going to be moving your stop loss up to this point. Next, and finally, this indicator, this amazing indicator, will help you stay within your overall percent risk. I always advise you to trade with no more than either 1 to 2%, like 1 to 2% of your overall account balance. Okay, this indicator manages your trade entry decisions instantly, and guys, that's one of the keys when you're trading Forex. You don't want to fret about wondering if you made the right decision or second guessing yourself. This indicator is going to give you all the important numbers for you to enter a trade properly. Okay, so that's how amazing this indicator is. Now, this indicator is really part of a mechanical stress-free trading, right? This indicator calculates everything automatically and seamlessly. This is part of the mechanical trading process that eliminates all guesswork, keeping your emotions in check to help you keep out of trouble and trade stress-free, right? That's what trading is all about. Okay, and where do we find this indicator? Well, if you look at your chart, it can be anywhere. In this case, in this example, I've shown you at the bottom left-hand corner. That's what it is. This indicator gives you these important numbers. I'm going to go over that in just a moment. But I call this your personal money manager, and that's exactly what it does. It's going to teach you properly, correctly, and it's going to make all the decisions for you so you can concentrate on other trading matters. Okay, so that's where it is. However, this indicator can be changed to the lower right over here. Can be changed to the upper right and the upper left as well. Okay, I usually like to have it at the bottom left, but you can change it wherever you want. You can also change some of the other settings and colors of this of the writing here as well. Okay, so now I'm going to show you the different meanings of the different terms of this indicator. So let's go back for just a second. So there's the indicator. It's telling you, giving you the correct numbers for your trade entry, and I've just enlarged it. You can see right over here, I've enlarged it. So let's go over each item one by one so that you can understand what this is really telling you. So the first key metric is the volume, and based on your account balance, in this example I've got $50,000 in my account here. I'm risking no more than 1% of this $50,000, so it's telling me automatically, it's calculating, and this is the best part, it's telling me that if I want to open up a trade, whether it's a buy or a sell trade, it doesn't matter, I can only trade with 3 mini lots. So 0.32 means 3.32 mini lots. I always round down when you're opening up trade, round down, never round higher. Never go higher, always go lower. So in this case, it's 0.32 means 3 mini lots. Just for your knowledge, if the volume says, let's say 3.00, it means 3 standard lots, and if this number says 0.03, it means 3 micro lots. Now, of course, remember, the volume is super important. Whenever you enter a trade, you have to know what your position size is, what you're going to start your trading, what you're going to bet with, basically, and 3 microlots means that for every pip you make, or price goes in your favor, you're making 30 cents per pip. 3 here, mini lots, means that you're making $3 a pip, or and if it says 3.00, you're making $30 per pips whenever it goes in your favor. Okay, now on the other hand, of course, if you're losing money, in this case, if I'm making money, it's $3 a pip I would make. So if it goes up 10 pips, I make $30. If it goes down 10 pips against me, then I'm losing $30. Okay, so that's volume. Now, if I want to, I'm looking at my chart and I want to enter a sell trade, okay, then guys, I'm going to look at this section right here, because this one, sell, TP, and sell SL stands for sell stop loss and sell take profit. So what it means is that when I'm entering a sell trade and I'm expecting price to go lower, I first have to place my stop loss at this level. You can see 1.7904, and if price and so that's my stop loss, and my take profit, my first profit target level, okay, you can see right here, first profit target level will be at this level 1.7646. Okay, now if I'm looking to buy a trade, when I'm on my chart and I see a buy opportunity, then I'm only looking at this. Look for the words buy TP, buy SL. So buy SL means I'm placing my stop loss at this level 1.7594, and I would draw a horizontal line here. Buy take profit 1.7852, I would draw a horizontal line, and so that it's telling me, and I don't have to do any calculations, I don't have to use a calculator, I don't have to do anything else. It's telling me exactly where my initial stop loss for buy trade is and where my initial take profit is for buy trade. Okay, isn't, like, how great is that, guys? I mean, this is fantastic. Okay, This one here just tells me how much time is left on the current candle. As you know, we're trading on the daily time frame. That means each candle is 24 hours, okay? And the candle closes every day at 5 p.m. Eastern Standard Time. So whenever I look at my computer, if it's before 5 p.m., Eastern Standard Time, it'll tell me how much is left for that candle. If I'm looking at after 5 p.m., let's say 6, 7, 8, or 9 o'clock in the evening, it'll tell me how much is left till the candle closes the next day at 5 p.m. So again, it's just giving me the information how much time is left in the current candle. Risk, I've already defined my risk as 1%, and guys, you can change the settings in the indicator settings, but I would keep it at 1%. You're not going to get into any trouble. And even here you can see on my trade, I'm looking to enter a trade. My equity is 50,000, so I'm willing to risk, or another word, guys, get used to this word, I'm willing to lose no more than $500. You can see that right here. So 1% of 50,000 is 500. Okay. And finally, my average true range. And guys, this is the number that makes this happen here. Let me just take that off. So it's the ATR that gives you the information for the stop loss take profit and the buy take profit and stop loss. Okay, so in this case the ATR means average true range, which means it's calculating over the last 14 candles. The average price movement for the daily candle was approximately 104 pips. You can see that right there. And the take profit is measured as 1 times the average true range. So if the average true range was 104 pips, the take profit is 104 pips. If you're taking a sell trade, 104 pips lower, okay? If you're taking a buy trade, it's 104 pips above your current price where you want to get in on a trade. So it's 1 times average true range for the take profit. However, your stop loss is calculated as 1.5 times the average true range. So if you want to take a, let's say, a buy trade and you expect price to go higher, the average true range is 104 pips. The stop loss for a buy trade, stop loss, is now automatically calculated at 1.5 times this 104, so approximately 150 pips below your entry. Please understand that. That's how these are calculated, guys. And that's part of your money management system to help you protect your money and also to help you trade stress-free. Okay, so let me take that off. Let's go to the settings here. And guys, you can see that you can actually change your settings. Here's the font size. The font size is the size of your lettering. I've got this light yellow. You can change it to white or whatever color you want, the color of your writing there. But this is important right here. This is the, see right here, the base corner, okay? I normally have it at number 2, which is for lower left. So I like to have my indicator, my position size indicator, at the lower left. It doesn't interfere with the price that I see at the right side. However, you can change it to whatever you want. If you want to change it to the upper right, you would use this number 1. If you want to change it to the upper left, to 0. To the lower right, you would change it to 3. Okay, so just by clicking and changing this number here. So leave everything else alone. These are basically my default settings. They should be yours, and that's sufficient. Okay, so let me just take that off. And now we're going to go going to take a look at some chart examples to see exactly how this indicator works and what you should be doing. Okay guys, I've got the New Zealand USD daily chart. So that means each candle you see here, each black candle, each white candle is 1 day's worth of price movement. And over the last 14 days, you can go back to candle. You can count back 1, 2, 3, 4, 5, 6, 7, 8, 9, all the way to 14. It shows you down below below here on the position size indicator that the average true range over the last 14 days is 51 pips. So this is not a big mover, guys. This chart, the New Zealand USD, there isn't a lot of volatility, so it doesn't move a heck of a lot each day on the average. Okay, now let's take a look. Oh, by the way, just want to mention, I did move this indicator from my bottom left, which is my preferred location on a chart, but if I kept it there, you would not see it on this video frame. Okay, so I've moved this indicator, I've moved it here to the bottom right, okay, just to let you know so that you can see it on the video. Now let's take a look at the information, and the very first thing is my it says, okay, this information is always for the last candle. Okay, so you can see that right here. It's for this last candle. In this case, we have a black bearish candle, so this would not be an entry. Okay, your entry on this chart, looking back, actually would be right here. There's the early entry. Here's another early entry. Okay, so you're looking at the early entry is your best entry that will give you the biggest bang for your buck, where if prices goes in your direction, you're going to make a lot of pips. You can see up to here and up to here, right? But because this information is for the last candle, we just have to pretend that this was where I wanted to enter a buy trade. Okay, you know, I'm producing this video on the weekend, so, and this is where I'm at. It's not an entry signal. I'm just using this as an example. Okay, so I'm saying that from here I'm looking for an entry to go higher, which means higher. Okay, and so I'm looking at buy, taking a buy trade. So I'm just looking at these two things here: buy, take profit, TP, buy, SL for stop loss. So the first thing is, if I'm taking a buy trade, my stop loss from the entry, and the entry is always the close of the candle. Okay, so the buy my stop loss is at this level 0.6686. Okay, so what I want to do is I want to place a horizontal line. Let me do that. I'll place one right now. Okay, and I'm going to place another one because I'm going to need it in just a second here. Okay, so this first line is the stop loss. It's the sell, we're taking a buy trade, so buy SL stop loss 0.6686. I'm going to click on the line, open it up, the properties, and I'm going to change the buy stop loss 0.6686. 6686. Okay, so click on OK. There's my stop loss, and if you take a look at it, guys, because I'm trying to teach you properly, my entry is here. My stop loss from the entry to this line should be approximately 69 pips. Okay, let me show you again. Entry. Oh. Okay, entry to here. Look at the middle number. You can see the middle number is like, okay, the middle number is 649. Okay, so that would be 64 pips. Okay, and that is 1.5 times the average true range. So just a second here, I just want to make sure I got this correct here. It's 51 pips. Yeah, so from the average true range is 51 pips, so this is 1.5 times, right? Again, I'll do that again. Entry. So 1.5 times 51 pips is approximately, you see the number 685. Ignore the last digit, the 5, and you're left with 68. So it's approximately 68 pips. So there's my stop loss, 1.5 times this, and my take profit. I'm looking for buy trade, so buy TP. Let's change this line up here to 6813. Okay. Oh. Horizontal line properties, 6813. Pretty good. I just was eyeballing that, so there it is. So again, if I'm taking my crosshair tool, which is located above the chart, from the entry, remember the entries from the close of the candle to here is 56. It shows, well, it's you know, I'm just doing this quickly because I'm not doing this accurately from the entry here. But again, that was 51 pips. Okay, so you can see that 51 pips, so that's correct there, guys. And you're just drawing the horizontal lines. Now you're going to place your trade, and once the trade has been placed, you're going to modify to make sure that you got your stop loss in and your first profit target. Okay, and you always do that when you place a trade. Then right click on the trade, which is below your chart, that the open trade. You want to, when the window pops up, you want to modify a trade and add in your stop loss and your take profit, first take profit. So you see, that's how that works. And if the trade was going to go higher, let's say from this point on, go higher, I would get stopped out with my first profit target. And here, just to read it, my volume was, I entered a trade, and I would have to change the parameters when you take the trade, because you're doing this all manually, guys. But it's 6 mini lots, okay, and I would have made 6 times 50, about $300, okay. So that's my volume. It's telling me I cannot open up a trade with more than 6 mini lots. Now you have to manually change that on the trade window, okay, just to give you an idea. So if you right click, trading, new order, okay, right there, there's your new order. You would have to change this here. This is the volume right there. Change it to, you probably have to do it manually here. So it would be 0.60 right there. Okay, so you can see that is the same as here, 0.60. So that's your volume. Then you would just buy the market at the same time. It's not a pending order, it's you're buying immediately at that price level, okay? And then after the trade is open, down below, you go below your chart, right click on the actual trade, and you modify it to add in your stop loss, okay? So guys, that's here, and my risk is 1%. And if I'm wrong, again, you just want to make sure if I enter right here and the price goes down, goes up, but then finally goes down and I get stopped out, this is my catastrophic stop loss, which means this is worst case scenario. I would be losing right here. You can see risk. After the 1%, it says $454 US. Okay, so 454, that's my loss. So I'm willing to lose that, but willing to make that. And you're wondering, well, why? Well, this is my catastrophic stop loss, so that this we would never allow to happen. We would never allow price to come all the way down. This is worst case scenario, which means that something crazy happened in the world, or something happened that allowed price to go quickly down, and we just want to be protected overall, okay? And so in fact, if we entered here and price went down just a wee bit, okay, we have another method for getting out automatically, because we're watching the candles all the time or each day, and we have a trend method of stop loss that would prevent price from coming down to our catastrophic stop loss. Okay, so we would always get out well before price goes down that low. Okay, so I'm going to have another video on that, guys, in the very near future. Pay attention to that one, that stop loss management. Okay, so let's go to another chart, and let me take that off. And this one is, I believe it's the US Japanese yen. And here I've moved the indicator. It was in the bottom right hand corner. I've moved it up to here. Okay, so you can see that all over here. Okay, again, just because if it's down here, it's going to interfere with these candles, so I don't want to do that. It's not good for the presentation. Now let's take a look here. First of all, it's telling me the average true range is 56 pips again here for this pair, US Japanese. The major pairs give you the lowest amount of pip movement on the average. The cross pairs give you the highest. My recommendation is always look at cross pairs if you can, because you'll make a lot more money in the same time frame, a daily candle. If a candle moves on the average 100 to 150 pips, and if you're right, you're going to make all that in profit rather than something like this. But anyways, let's just pretend that here we see price has come down and we want to take a sell trade. Price is below the pink here, so right at this level we want to take a sell trade, and it shows, and we're only looking at this sell information: sell stop loss, sell take profit. That's if we're taking a sell trade, right? So for the sell stop loss, and always place the stop loss first, guys. Always consider your risk first. Stop loss at 108.61. Okay, let me just do that with the horizontal tool. So place one line, and I'm going to place another line right away. Okay, and then we're going to change this horizontal line properties, and I'm taking a sell trade, guys. So my sell stop loss is 108.61. Okay, 108.61. There we go. That's my stop loss. And here, see, I'm clicking on the line once, right? I'm sorry, I'm clicking on the line once to get this little box. You want a little box on each end of the line. Okay, so once you see that, then you can right click, bring up the properties, and for a sell take profit, 107.21. Okay, 107.21. Okay, good. Click on OK. There it is. So now the thing is here, again, just visually, if price was to go up a little bit and then come back down, and we would be stopped out here at our take profit level, we would make, take a look, guys, the risk is 1%. So the volume, this is what we're looking at. I'm opening up a trade with 0.58. Remember, round down, never round higher. So it would be 0.5. So 5 mini lots again, 5 mini lots, which is basically $5 per pip in profit. $5 times 56 pips. So I would have made close to $300 again if price would move down to this level, right? If price moves higher, right here, and I get stopped out at my stop loss, okay, then remember the stop loss is 1.5 times the average true range. So my stop loss would be around about 85, 86 pips higher, right, from my entry, right? So I would lose that then. 86 pips times, as an example, I'm just rounding off, guys, 86 pips times my volume, $5, so I'd be losing this amount right here, because it's telling me, right, my risk 1%, my maximum risk is $454 US. Okay, so that's my loss. So I am always making my first profit target is always less than my stop loss, because I almost never expect price to go from here and right away hit my stop loss. Well before that, I would be stopped out. Because I will be stopped out because I'm watching the candles every day. This would only happen if something crazy happened in this world, and that's why the stop loss is 1.5 times. But we have another way of managing our stop loss. As we're watching the charts, okay, and our stop loss would be not a great amount of money at all, okay, and our take profit, again, like I said, is right here. So that's what we can read with this information up here, guys. Your take profit is 1 times the average true range, in this case 56 pips, so I make 56 pips worth of profit. My stop loss is 1.5 times 56, and so it's approximately about 80, 85, 88 pips, something like that right here, okay? And that's how we look at entering a trade. So with this information with this information, which is your personal trade manager, it's called the position size indicator. You will never go wrong. You will always know, first of all, your risk. It's 1%, so it'll tell you your risk. Of course, if you're trading with only hundreds of dollars, or let's say you only have $500 in an account, it's going to be a lot less than this. Now remember, this risk is based on my equity of 45,447 right here, okay? That's the 1% of that. So you'll always know your risk. You'll know your volume that you enter a trade with right there, 0.58, so round it down to 5. And guys, you'll know exactly if you're taking a sell trade where your stop loss is, where your take profit is, or if you're taking a buy trade where your stop loss is and you take profit. Guys, you can't go wrong. You can't lose money big time like you were in the past. This is going to help you trade stress-free, and I hope that you got a lot of information from this video, and that's great. So this is just a video showing you what to do when you're considering a trade entry. So guys, again, thanks a lot for watching, and we'll see you again next time.